we're kind of just getting into how and where the three of you are invested, where you see opportunities. And Kevin, I want to pick it up from what you were just saying in terms of the setup, in terms of, growth is still positive but decelerating. It sets up a nice opportunity perhaps in maybe some of the dividend plays and infrastructure plays. Talk to us a little bit about what you're doing in your portfolio.
Sure. Historically speaking, you've often had within infrastructure, you have a lot of operating leverage. You have a pipeline, and whether it's, pushing more energy through, or a utility that's pushing more power through, you're just looking at a set of growing cash flows with the economy continuing to grow, but then the discount rate being applied to that. Maybe not today, maybe it's not topical today, but shortly you're going to have that discount rate feel a lot better. And so the valuation placed on those. That's within the infrastructure side. I'm actually structurally bullish infrastructure for a variety of reasons. Long-term money flows, consistent cash flows, and then government bond yields being anemic. Within sort of our more balanced or straight Canadian and global equity, we are bullish financials. That I think, particularly in Canada, I think you have a couple of catalysts coming up, perhaps with the OSFI meeting allowing for some capital returns coming up, after the new government is sworn in, after a new OSFI meeting. And I think, there's not many oligopolies with ROEs in the high teens trading at about an 11 or 12 times PE. So we're structurally long Canadian banks within Canada and feel very, very comfortable with that. And around the world, we've been long materials and energy. It's been a good trade. We're taking off some of that beta right now. So that's kind of where we're positioned and where we think the puck is going.
Okay. And Kevin, just kind of wrap it up there on those points, those areas. Your top stocks then within pipelines, infrastructure, and telecom financials?
Sure. You know what? There's a few of them. I'll just throw a couple out with a couple of hits you can pursue or not. Look, within telecom, cover telecom. We really like Telus. We think they've pre-funded their CapEx. They have a competitor that's subject to a bid. They're going up against Shaw, but they're technologically advantaged. And I think they're strategically advantaged, with Shaw being a little bit distracted on the Rogers bid and all the things going on there. Within pipelines, we actually prefer a U.S. pipeline largely. It's called Hess Midstream. It has a very tight relationship with Hess Oil, famous oil company in the Bakken. Basically has a singular set of contract, a very fixed return at a very high level with a great balance sheet and good exposure to what we think will be growing energy production in the Bakken. Throw in a 7.5% dividend yield. And that looks at a reasonable valuation, looks extremely attractive to us.
Okay. Brandon, let me turn it to you for a moment here. Your style is a little bit, well, obviously very different than Kevin's, more of a bottom-up and growthy approach. Talk to us just a little bit about your approach before we head to break, and then we'll get some ideas.
Oh yeah, we're definitely we're bottom up, but sometimes going bottom up shows you some more secular and industry themes. So a bottom up can turn to a top down, but we're not gonna, I'm sure Kevin doesn't either, but we're not gonna shotgun everything. I would agree in financials, like they're all gonna move together. If you're gonna own one, you should maybe diversify on the bunch because they're going to be correlated. So we don't necessarily look at those correlations. We're probably going to just like, okay, well, we like BMO and RBC, but not those two, which, Kevin's approach is probably a little better on that basis.
And so in terms of other areas, though, that from a thematic perspective, what resonates today?
Well, like I said before, I am worried about the easy comps versus last year, the tough comps, U.S., Canada. So we are looking at larger secular themes. Things I like would be housing, not in terms of house prices, but in terms of construction materials or in terms of furnishings and stuff like that. We're also looking at job mobility as a huge theme. In the resource space, I'm not a huge fan, unfortunately, of oil and natural. Not oils, less natural gas. I'm okay with, but these are very, very cyclical. But I do think that there's a big secular call in copper. It goes to infrastructure, it goes to electrification of everything, and it goes to the fact that it takes a long time to put a a large copper mine in production, and they're just not going to get there fast enough for the demand that's coming in the next couple of years. Structural copper shortage coming. They could send copper to like $8 in a few years. So those are sort of the thematic things that we're looking at right now.
Okay, and I think as well from a thematic perspective, there's the same argument has been made with the energy sector. I've got 10 seconds, but do you agree with that, Brandon, that the supply
Well,
demand
yeah.
dynamics are just totally out of whack?
I mean, only very short term. You can bring production so quickly now. When rig counts go up 10 rigs now, it's like coming up 40 rigs like 10 years ago because of just the technology changes.